Ladies and gentlemen, Tesla had a great day today. A lot of this had to do with what Elon Musk said last night about Tesla, about Optimus and new Megapack factories and Cybercab. There's going to be a Cybercab rolling off the production line every 5 seconds coming in the next 6 to 12 months. All of this really came to Wall Street as a shock. I mean, people thought that Elon was like not running Tesla. Like, who knows who is running Tesla? That was kind of the average Wall Street folks' opinion on Tesla right now. So that kind of shocked everyone. And that is why Tesla did well today and just completely outperformed everything else. And I do have some news to share with you as well in this video that kind of is, again, shocking Wall Street. Tesla is now officially testing full self-driving in Europe. Now, we're really just waiting for regulatory approval in Europe. Now, countries in Europe that drive on the right side of the road, as Elon has already said, it's going to be a little bit more difficult to train FSD for that. But it's only like the UK, like most countries drive on the left side of the road, like have the American standard, okay? So we should be able to launch FSD pretty soon in Europe. And this is another catalyst that Wall Street really hasn't been paying attention to. And now it's being put on notice yet again. Also, you can see here, according to JP Morgan, retail investors are buying Tesla stock at a pace never seen before. Quote, individual investors have been net buyers of Tesla shares for 13 straight sessions through Thursday, pumping over $8 billion into the stock. And like, when they say this has never been seen before, that is an understatement. Look at this chart. I mean, you have never seen anything even close to this before. This is almost double the second highest, month or week for retail investors, flowing money into Tesla. This has never happened before. Joe Tetmeyer also shares with us construction of the new Giga Texas Central Support Facilities, aka Cortex 2.0, that is well underway, with grading work nearly completed. Piles for footings being made with augers and parameter roads. Rebar cages for footings being continue assembly on the east side, and I'm thinking footing excavation work should start very soon. So here you see it. Work for Cortex number 2 is well underway. And yeah, that's a lot of rebar. And look at this. Trump has suggested sending Tesla vandals to El Salvador prisons. I don't know. That should be a deterrent, like in and of itself, because nobody wants to go to El Salvador prisons. Especially not the liberals that are vandalizing Teslas. Also, in pretty interesting news, Fundstrat's Tom Lee pulls Tesla shares into the Super Grannies ETF alongside Meta and Nvidia. Cathie Wood reiterated yet again today that Tesla will hit $2,600 by 2029. Said again by Cathie Wood, which would give Tesla a roughly $9 trillion market cap. And Joe Tetmeyer is sharing more of the 4680 production cabinet deliveries today and robotic assemblers being moved into Giga Texas factory. This follows comments at last night's Tesla all hands call where we heard about this and that 4680 produced cells here are now the most cost-effective in the world. Dry cathode 4680 should soon begin introduction in the Cybertruck and possibly other vehicles. Now, coming next week, as far as economic data, you are going to have some important catalyst. On Monday, Chicago Fed National Activity Index, and S&P Global Composite PMI, Manufacturing PMI, and Services PMI. Any and all economic data right now is vitally important for markets because while some of the fears have kind of subsided in markets, the underlying question is what's happening with the economy? And what I mean by some of the fears have subsided in the economy, the VIX is 19.5 today. A far cry from where it was just a week or two ago when it was almost at 30. Okay, so a lot of the fear has indeed subsided. And whether or not that is going to continue really comes down to what's happening in the economy. Now, on Tuesday, S&P Case-Shiller home price year over year and month over month. CB consumer confidence. Now, these consumer confidence reports will also be important because people, when they're not confident, do not spend as much money. Businesses do not invest as much, and they do not hire as much, which is really the first sign towards recession. You will get new home sales for February and new home sales month over month. Richmond Fed Manufacturing Index and services revenues will also be coming out on Tuesday. On Wednesday, you have your first set of very important economic data. That is durable goods orders month over month for February. We don't actually have a forecast here yet, but last month was positive, apparently 3.1%. So, yeah, it's probably going to plummet, but we'll see. We've been shocked before. On Thursday, you are going to get the GDP growth rate quarter over quarter, final number for Q4. You're expecting 2.3%. But again, if that comes in lower, that's not good. If it comes in higher, that's positive. Initial jobless claims will also be coming out on Thursday. You get some core PCE data, some finalized Q4 data really across the board that'll be coming out, pending home sales month over month and year over year as well. Kansas Fed composite index and the manufacturing index as well, 10 o'clock in the morning on Thursday. Fed Barkin will speak at 3:30 p.m. on Thursday. And then on Friday, you're going to get core PCE month over month. You're actually expecting that's going to move higher from 0.3% to 0.4%. Obviously, lower is better, higher is worse. Personal income month over month expected at 0.3%, down from 0.9% last month. And personal spending month over month is expected to be positive 0.1%. Following February's negative 0.2%. So that's a big one as well for the economy. If personal spending comes in weak, then that's going to bring up more of those recession fears. Now, I bring this up because in regards to Tesla, you could have all of the good news like we've seen today. Tesla can react positively to that. But the bottom line is, if we head towards recession, Tesla's going to sell off. Tesla's going to get hit hard on that. Harder than other companies. You've already seen that. Tesla's down about 50% from all-time highs still. Okay, I think part of that has to do with some of that recession fear being priced into Tesla stock. If that narrative grows, if there becomes more fears about a recession, Tesla's going to sell off even more. Vice versa, if next week we kind of get a relaxation of those recession fears, Tesla could recover quite a bit. The first level you'd really want to watch for is 250. You got to get above 250. There's been a lot of resistance here recently. But then you have your 20-day moving average at 261. Should be pretty easy to get above that. But I don't want to drop to conclusions or anything. Your 200-day moving average is the big level around 284. If you could get above that, then you're set up for a test of 310 to 325. I know it sounds like a crazy rally. Tesla's basically done nothing but fall for the last 2-3 months or so. Most people don't even think a bounce like that is possible anymore in Tesla. And a lot of people have written Tesla off, besides retail investors. Retail investors clearly see something that a lot of other Wall Street folks do not. But again, if it looks like we're heading towards recession, Tesla's going to fall. It's not going to rise. And again, honestly, I'm a little nervous for the broader markets because of some of the things that you're seeing out there, okay? People have gotten a little too complacent, I think, on the, they're a little relaxed right now. Let's just call it that. You could see the VIX at 19.5, even though the indexes were under pressure today. The VIX fell almost 2% or fell about 30 cents. You're back to the same similar levels you were at in January of 2025 and, October of 2024 and September of 2024 and obviously August of 2024 when there is a lot of risk right now. The odds of a recession continue to climb and uncertainty really politically and as far as policy and trade wars and basically everything is hyper elevated, you don't see that same level of fear in the VIX, which, should there be more fear? Probably. So what this looks like to me is kind of what you had in 2022 when the S&P first sold off. You fell like 13% and then you bounced, okay? You had to bounce because you were oversold on the RSI. You had just kind of flushed out really quickly. You bounced and then you fell and hit newer lows, but the RSI didn't get oversold again. In fact, throughout 2022, you never got as oversold as you did during that first crash, if you will, in January of 2022. Even though you were only down 12%, the S&P continued to fall to almost negative 30%. At the lows, you were down about 27%. But you never got as oversold. You never really even got oversold after the January first fall. But markets continue to move lower, but there was these bounces, these bear market rallies, these relief rallies in the meantime. That's what this feels like to me. It feels like just a bit of a relief rally, a dead cat bounce, if you will, with the RSI that is now back to 41. You have room to move lower now from a tactical perspective, from a momentum perspective. And if we get a bad headline or the data next week shows more recession concerns, you're going to move lower. And that's where I don't like, again, the risk reward in this market. You have to see things go exactly perfect this year to get back to where you were even in, mid-February, right? A month ago. Like back to 611 on the SPY. Things have to go pretty perfect because we're expecting slower growth, higher inflation now. If the trade war ended tomorrow, that would obviously change things, but how likely is that? How likely do you just get a free trade announcement and reciprocal tariffs are off, right? Globally speaking. I don't know how likely that is. Okay, so you've only priced in a little bit of that pain. The issue would be is if we started to head towards recession, there is massive downside potential. Like massive downside potential, like 40% downside potential from here. Whereas the upside potential, again, if everything went perfect, is like 10%. In that environment, it's not when you want to be heavy on leverage, heavy on margin, putting all of your ducks in one basket, right? You want to have some cash on the sidelines. You want to do some buying in specific stocks like Tesla. I've been doing quite a bit of buying in, but I'm not putting all of my money in on Tesla in the 220s, 230s, 240s. I did go a little heavier in the 220s. And anything below that, I will go heavier. But the fact of the matter is, we are nowhere close to out of the woods yet. I mean, this is going to be with us for months. And unfortunately, I don't think this is the last of the selling that we're going to see. As people start to draw those, recession cards out the playbook, you're going to see some pretty aggressive downside. Now, maybe the economy is just fine. I guess that's kind of the thing we're trying to figure out right now. But odds are recession fears are materially higher, or recession risks are materially higher than what equity prices suggest. And to kind of close that gap could be a bit painful in the short term. And again, I've already said, if we go into a recession, you could see Tesla at $100 a share. You could see it at $80 a share if we went into like a bad recession. That's why I'm not going all in Tesla here, even if the stock is down 50%. But if we avoid a recession, Tesla's going back to new all-time highs by the end of this year. That's a double up from here, at least in my opinion. So you want to have exposure, but not be all in at a moment like this. That's my opinion. I'm not a financial advisor. I'm not a financial planner. Obviously, that could be the wrong take. Let me know your take down below in the comment section. But with that kind of downside potential on a single stock basis or on the index basis, It's an environment you want to be really, really careful in. Okay? Get out of margin. Raise cash. Do extra side jobs. Doesn't matter. If we go into a recession, $100 could turn into $1,000 or could turn into $500 pretty easily. So even a couple hundred extra dollars, even though you may not think it's a big deal, could turn into thousands of dollars buying assets at severely depressed prices during, mass fear of a theoretical recession, if that happens. So, let me know what you guys think about this down below in the comment section. And for a long time now, we really haven't had a recession catalyst because you normally don't walk into recessions. The economy can, evolve to handle issues if they happen slowly or kind of gradually progress. But things that happen quickly are very difficult to adapt to. And that is what a shock event is. In this case, it's Doge, it's tariffs, general uncertainties out there, insecurity in the jobs market, immigration, being cut off essentially. For better or for worse, all of these things short term are coming together as a potential recession catalyst. You can't be clear on that or too definitive on that, but you could definitely make a case that this is a shock event to the economy. I mean, Fed Waller said that today, that if these conditions persist, it could be a shock on the economy. And, I want to be ready to capitalize on any opportunities that are presented in the wake of what could be this shock event for the economy. So, again, let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic weekend, and I will see you in the next one.